Welcome back to this Money Control live stream. It's a Thursday morning, a truncated week for the market and last trading day for the week. I'm Nandita Khemka and you're watching Opening Bell with me. We did see a good recovery yesterday from the day's low. In fact, managed to defend that crucial support level of 22,450. Today, there could be some bit of a green on the screen given the fact that GIFT Nifty is hinting at a positive start. Wall Street saw recovery as well. And of course, Holi festivities are on in full swing. We are hoping to see the color green and not red on the screen. In terms of stocks, lots to watch out for. In the pre-open, I can see IndusInd Bank building on the gains that it saw yesterday. So, a second straight day of gains may be in the offing for shares of IndusInd Bank. Lots of other stocks like BEL, BEML, Jubilant Pharmova are in focus. We'll try and touch upon that. And we'll also be taking up all your stock related queries as usual. Keep them coming in on our live feed. We'll try and get them addressed. But of course, before we move any further, quickly take a look at the top headlines at this hour. Wall Street ends mixed on the back of a soft inflation report. The S&P 500 closed higher by 0.5%, while the Nasdaq jumped over 1% as traders snap up tech shares. For the month of February, the CPI, the retail inflation, increased 0.2% for the month, lower than expectations of 0.3%. Asian markets trade mixed following US stocks snapping their losing streak. The GIFT Nifty is hinting at a higher start for our markets. In fact, in the pre-open as well, we can see an uptick when it comes to the Nifty above that 22,500 mark in the pre-open. Oil prices rise 2% on the back of a weaker dollar even as tariff uncertainties loom. Brent is back above $70 a barrel. Meanwhile, gold prices rise aided by a cooler than expected US inflation report. And back home as well, retail inflation came in much lower than what the street was expecting. It has eased to a 7-month low in February, mainly due to a fall in food prices. Now, this paves the way for another RBI repo rate cut next month. It's basically a double delight, so to say, given the fact that industrial output grew by 5% in January on the back of an uptick in manufacturing activity. All right, then, good cues this morning and yesterday, although it was a volatile session, we did see the Nifty recovering 150 points from the day's low. So, the trend is pretty much the same, right? In the last few sessions, we've seen the Nifty starting out on a positive note, slumping to, the day's low and then again staging a recovery, which is what happened yesterday as well, because we did close above that 22,450 mark, which has emerged as a crucial support zone for the Nifty. In fact, today at open, we could see the Nifty, in fact, holding above that 22,500 mark as well. But it wasn't such a great day for the broader end of the markets because the Nifty mid-cap index was down somewhere around 0.5% or thereabouts. Financials were doing well yesterday. And that kept the Nifty Bank in the green. The likes of HDFC Bank, Kotak Bank, these are some of the top contributors to Nifty Bank. Even IndusInd Bank made a mild recovery after a 27% cut day before yesterday. Some of the other notable stocks that were in focus yesterday were the likes of Tata Motors, saw strong buying on the back of positive management commentary and positive brokerage reports as well, following comments on JLR margins and how the management is hoping to achieve the FY25 target. And aside of that, you also had Bharti Airtel and Reliance Industries. They were in focus. They have inked a pact with SpaceX, Elon Musk's SpaceX, to bring Starlink's high-speed internet to India. Although Bharti Airtel erased gains, Reliance Industries ended the day in the green. IT companies, of course, they were the big talking point yesterday. A 3% cut on the IT index on the back of recession fears in the US and negative brokerage reports, which have flagged off that recovery in discretionary spends may not come in FY26, and stocks had in fact seen a good rally post third quarter numbers because managements had indicated that the worst on the revenue front may be over, but now there are renewed concerns over revenues as well, which is why the likes of Infosys, Wipro, Tech Mahindra, TCS, all of these were laggards in yesterday's trade. Of course, in terms of the futures and options cues, if you look at the put call ratio, that fell to 0.96 vis-a-vis 1.09 in the previous session, and there are a couple of in fact 5 to 6 stocks in the F&O band today. They have been, they continue to be in F&O band today as well. The likes of BSC, Manappuram Finance, Hindustan Copper, IndusInd Bank, as well as SAIL. In terms of fund flows, we have noted that, of course, foreign outflows have slowed down a bit this month. Day before yesterday, the figure was very meager. It was somewhere around sub 500 crores. Yesterday, it was a little higher, 1600 crore rupees worth of stocks sold in the cash market. On the flip side, 1500 crore worth of stocks bought in the cash market by domestic investors. Quickly bring on board our guest for today. Joining me is Chandan Taparia of Motilal Oswal. Chandan, looks like we are poised to see some green on the screen on Holy Eve. 22,450 has been defended smartly by the index, even though we have slipped below that level intraday couple of times. But today, do you think 22,500 to 550 could be one level to watch out for?
Good morning. First of all, wishing you, entire team at Money Control, and to all the viewers a very colorful Holi. And may this Holi brings all joys and green color in your portfolio after the decline of last 4 to 5 months. And I believe that already the market has taken support at 22,000 just couple of days back, and now supports are gradually shifting higher. However, our foreign friends are selling, but I think if they come for a short covering, that could be a trigger to extend the next leg of rally. So I believe as of now, the immediate support for index will be near 22,330. Until it holds about 22,330, the recent consolidation could turn into the buying opportunity towards 22,800 to 23,000 marks.
Okay, that's the view. Those are the levels to watch out for on the index. But the Nifty Bank Index managed to outperform yesterday. IndusInd Bank also saw some bit of recovery. Do you think the recovery, that mild recovery that we saw on IndusInd Bank, will only speed up here on, and the Nifty Bank Index? Do you think this leg of up move will sustain into next week as well?
So Bank Nifty managed to hold support of 47,750, 47,700. It was holding well. Uh, However, even after the sell-off of IndusInd Bank, it managed to hold support led by buying interest in HDFC Bank and other banking names. So I believe some recovery could be there. Technically speaking, from last 2 weeks, this index has been making a small-bodied doji sort of candle, which clearly indicates that declines are being bought and the pace of selling is getting lesser. So I believe because of that, some upswing could be there. With support of 47,850, we can see a bounce towards 48,750 to 48,850 in the Bank Nifty index.
Okay, and what about IndusInd Bank? I want to ask you. We have a query. I want to get it addressed here itself. Kamalaja wants to know your thoughts as to how one should really deal with an IndusInd Bank right now. Should we wait for few sessions and see in which direction it goes, and then start accumulating, or should we consider it now, considering its downturn from its highs? I think 609. That's the low it made yesterday. An opportune time to buy, or wait for a few more sessions?
I think let's wait here because we have seen a corrective move of more than 30% in last 2 3 days, and setup is negative. It has been making lower top, lower bottom. However, yesterday it witnessed a recovery, but before that, sharp sell-off has taken it to lower levels. In fact, shorts are added. So let it hold beyond 730, 725. Then only the stability will be back. And I believe in this market, there are many counters which are finding sustained buying interest. Better to focus on them rather than picking the volatile name, which has got stuck in a broader sell-off in the last couple of days.
Okay, that's the view. Hope that answers your query. Just about 5 odd seconds to go for the markets to open. They are expected to open in the green. Yes, the first tick is coming in. It's a 50-point uptick on the index, 22,510. That's where we are at. 150-point up move on the Sensex. The mid-cap index as well, moving in tandem with the benchmarks. The Bank Nifty building on yesterday's gains, another 0.3% kind of a gain coming in there. Right now, the breadth is of course tilted strongly in favor of gainers on the NSE. 3.5 stocks gaining to 1 stock declining, but of course early days to really call it a trend. But 22,500, we are there around that level as of now. But let's see which are the sectors that are taking the lead, and what exactly is the IT pack doing, given the fact that we saw a good recovery in Nasdaq overnight. We could see some bit of a green. Yes, IT pack is trading with gains of 0.5% or thereabouts. So yes, some bit of recovery after the 3% cut yesterday. Autos are out of favor today. Yesterday they were among gainers. The consumer durables pocket also in the red as we speak. Aside of IT, what's doing well is the metal pack. 0.5% gain on the metal pack as well. Oil and gas trading with gains of 0.3%, but OMCs will be in focus given the fact that Brent is back above that $70 mark. PSU banks for 0.5% kind of gains there as well. So all in all, it's a good start. Even if some of the sectors are in the red, it's marginal, nothing really to worry about. So right now, the texture of the market is looking good, although we have cooled off slightly from opening levels. 22,500 has been taken out, 22,490 or thereabouts. That's where we are at. In terms of individual movers, then some metal and technology names are featuring on the gainers list today. The top gainer is Tata Steel, followed by Tech Mahindra. Bajaj Finance is also doing well, and you also have Bajaj Finserv. That's on the gaining side. Infosys has managed to recover, Wipro as well in the green. So yes, given the fact that we saw some bit of a recovery on Nasdaq, and of course the US CPI print is lower than expectations, so that has eased that stagflation concerns. So yes, we are seeing some bit of buying coming in on tech stocks. SBI from the PSU banking lot is also among the gainers. Tata Motors has slipped into the red. It was the top gainer yesterday, but today it is trading with 0.5% cut or thereabouts. Sun Pharma, Dr. Reddy's, so some of these pharma names are out of favor. BPCL among top laggards, as I mentioned, crude is back above $70. Shriram Finance and Ultratech Cement, Asian Paints, Trent, Britannia, these are some of the consumption names under pressure. But Chandan, I was talking to you about IT stocks, I think. After the kind of cut we saw, there's some bit of buying emerging, and now that stagflation concerns have eased after the CPI print in the US, do you think, after this correction, it's a good time to get into some of these IT names?
So looking at the Nifty IT, we've seen sell off in the last couple of weeks, and it has been making lower top, lower bottom. Resistances are gradually shifting lower, and most of the counter from the IT pack witness selling pressure. So I think we should wait and watch, whether be it heavyweights counter or small cap, mid cap. Most stocks are finding sustained selling pressure. So my advice is to better to wait and watch and look for further more corrective swing to accumulate these counters.
Okay, wait and watch. That's the call on IT stocks right now from a technical perspective. Another stock that's in focus is Jubilant Pharmova. Its arm, Jubilant Cadista, has got the US FDA Establishment Investment, EIR with a voluntary action indicated status for Maryland unit. The US, in fact, FDA had inspected this particular facility back in January. The inspection stands successfully closed, and the facility is not expected to manufacture any products right now, given the fact that the manufacturing operations were shut at the unit back in April 2024. The stock is up 2%. Its establishment inspection report, I beg your pardon. So, that's a shot in the arm for Jubilant Pharmova, right? The stock is doing well. It's up 2%, although we've seen some of the other names like Sun Pharma and, other large cap pharma names under pressure today. Jubilant Pharmova, of course, on the back of this news, is trading in the green. It was up somewhere around 2% or so last time I checked. How is this particular stock looking on the charts? Because in the last 6 months, it has shaved off somewhere around 26%, and even on a YTD basis, it was out of favor, 20% cut. So, here on, any signals that it could stage some bit of a comeback, any trend reversal indicated by the charts?
So as of now, the short-term structure is negative, and the stock has been making lower top, lower bottom from last 5 months. It has seen a corrective move from 1300 to 850. However, the good part is that on last time it took support near 845, and even on last trading session it made low near 850. So there is the only cushion as of now. If manages to hold 850 or 842, some recovery could be there. Otherwise, below that, it can further open the downside. So it managed to hold some sort of stability, but follow-up action is required. So use the level of 850 as a support, and upside we could see 925 to 940.
Okay, that's the view on Jubilant Pharmova. But let's shift focus to some queries now. I can see a query on Tata Motors. It's coming in from Naveen. Wants to know your thoughts on this stock. Of course, yesterday we saw the stock emerging as the top Nifty gainer. It is coming off its 52-week lows, but the recovery couldn't really sustain because today the stock is back in the red. Do you think the structure it remains negative, or do you think that there could be some bit of a recovery, because whatever recovery it made yesterday was fairly feeble? What are your thoughts? Which way is the stock headed? More sell-off to come?
I think some sort of more selling could be seen in the counter. We have noticed that every bounce is being sold, and as overall the market is slightly negative, and it is very tough for the indices to hold. It would be tough for selling any sector or stock. So I think that is the reason. Looking at the price behavior, recovery was seen, but support-based buying is happening after a long time. The good part is it has negated its lower top, lower bottom, but the major trend is negative because it has seen a corrective move from 1170 to 600 level. So deep oversold territory is there. It might provide a better risk reward ratio, but only problem is the follow-up activity and absence of buying interest in the broader market. So keep the support near 650, and if that is being respected, then some recovery could be there in the counter.
Okay, keep a support level at 650. That's the view, but there could be more selling in the counter. That's the view on Tata Motors. Hope that answers your query. Next query, on two stocks that have been in focus: Bharti Airtel and Indus Towers. Of course, Bharti Airtel gave up gains yesterday. Even Indus Towers was in the red. Stocks have been in news because of their pact with Starlink, Elon Musk's Starlink, to bring its high-speed internet to India. Satya CK has a query on the next levels to watch out for on Indus Towers and Bharti Airtel for fresh longs. And secondly, we also have queries on Reliance Industries. I'm not getting the person's name, wants to know the right price and time to enter Reliance Industries for the medium term. So these three stocks, what would you do now? Bharti Airtel, Indus Towers and Reliance Industries. The levels to watch and what one should do.
So looking at the Bharti Airtel, it has seen a recovery from 1560 to 1700 zone, but yesterday it fell down sharply, or I can say tumbled down from higher levels. So major trend is positive, but only concern is the absence of buying interest. So one can go with buy on decline stance with support of 1600 for a recovery towards 1700 marks. Looking at the Reliance industry, here we may see a positive price action, managed to hold the key moving averages. So with support of 1225, it can head towards 1285 to 1300. So both the counters are having limited upside with buy on decline stance.
Okay, that's the view. Buy on declines on these stocks. The next query is coming in from Shweta Naidu. Wants to know your thoughts on IRDA. She's bought shares at 266 rupees. Wants to know at what levels can she exit and reduce her losses, or is there a scope to recover all her losses completely? Your thoughts?
I think it would be tough as of now because from last almost 8-9 months, the stock has been making lower top, lower bottom. It has seen a corrective move from 300 to 140, and next support goes to 128. So wait for 128 to act as a major support. So not expecting immediate recovery, but yes, stock already has seen a corrective move, so better to wait and watch. That is the only strategy he can apply or she can apply as of now.
Okay, that's the view. I hope that answers your query on IRDA. I want to take up a query on an Ultratech as well, since the stock has been in news. Of course, that limestone tax that has been proposed by the government, that is something that has come as a setback for the cement names. Ultratech down today as well, 0.5% lower or so. The query is whether it can be bought for the medium term at current price, if not UltraTech, which is the other best bet in the cement pack? Your
So I
thoughts? Anything looking attractive on the cement pack?
so in the last month, it has seen a corrective move from 11,800 to 10,000, corrected by 10-12% from higher levels. But the good part is it has been consolidating in a range from last 8-9 days with higher base at 10,250 or major support at 10,000. So I believe by keeping the 10,000 as a support, one can look for a recovery towards 11,300 to 11,500, and it could be the best name in the cement pack.
Hmm. So basically, the Tamil Nadu government has increased mineral tax on limestone, and stocks like Dalmia Bharat, Ramco, Ultratech Cement. These are some of the counters that will be impacted, and of course, it is applicable from the 20th of Feb. So yes, these are some of the stocks, of course, that have been under pressure since yesterday because of that. But let's see what are the other queries that we are getting at this current juncture. I can see a query on Nectar Life. Uh, you know, Silky Bhartiya wants to know how one should navigate this particular stock. The stock was under pressure on the back of negative news flow. Just want to see what it's down another 5% today. In the last 5 sessions itself, it has lost 20%. Any thoughts on how to navigate a Nectar Life? It is in fact at fresh 52-week lows.
So better to avoid. The stock is on down circuit day by day, trading at multiple months low. Major trend is negative. So it would be very tough for heavyweights counter to survive in this market. Forget about the mid cap counter where the volume is now dried up. So I think it can go down to 20 or 19.5 something.
Okay, what do you like within the two-wheeler pack now, Chandan? I think TVS Motor has seen an upgrade from Kotak Securities. So that is one stock that's in focus. And Bajaj Auto, I think there were some bullish targets, that were highlighted by some of the brokerages recently. Between a Bajaj, Hero, and TVS, anything that you prefer now?
So Bajaj, Hero, and TVS. Nifty Auto Index is negative from last couple of months. Most of the stocks are in corrective phase. And if I have to pick one out of three, then I'll go with TVS Motor because it has been consolidating from last few days. And before that, it had a corrective move from 2,700 to 2,200 marks. Now the base is being formed. So with support of 2,200, we see a bounce towards 2,400 in TVS Motor.
Okay, so basically, Kotak Securities has upgraded TVS Motors to reduce from sell, and the target price is at 2,200. So yes, TVS, of course, as Chandan also pointed out, looking good on the charts. It's up somewhere around 0.4% at the current juncture. Any other query? Of course, Hero Moto we just discussed. TVS is looking the best on the charts. But let's shift focus to a query from Rupak Mehta. Then he wants to know your thoughts on Dreamfolks and PVR. Should one make an entry into any of these stocks? What about PVR? I think it got a reprieve from the Karnataka government just a few days ago. In terms of the share price movement, it is down by 0.5% or so at the current junction. The last 5 sessions, it has lost 7%. Stock is around that 911 level. It's of course halved from its 52-week highs. Any thoughts? Is the risk reward looking good here?
Risk reward looks good in many counters, but the problem is the follow up and buying support is not visible in the broader market itself. If I look at the price behavior, I'll just
Right.
recall the COVID lows that used to happen near 700, 800 marks. From those 700 levels, it headed to 2100 and now it's back to 900 or 875. I believe let it correct more, and that will be the next buying opportunity. Those who are looking for better risk reward ratio. But frankly speaking, the trend of the counter is negative. It has been making lower top, lower bottom. Let it correct till 850 or 825 to get some stability for short term point of view.
What about Dreamfolks?
So Dreamfolks again trend is negative every day. The stock has been making lower top, lower bottom. stock is trading at lifetime low. So my suggestion is better avoid. It can go down below 200 marks as well, which will until it remains below 235, 237. Avoid the counter weakness could continue.
Okay, that's the view then. A couple of more queries trickling in. GC Prakash wants to know your thoughts on what are the right levels to accumulate Medi Assist. How would you really look at that stock now, Medi Assist?
Stock is now quoting at its lifetime low. 430 was the low last year it made. In fact, it has the price history of 14 months. So at the listing time in the Jan 2024, 430 was the low, and now we are just meeting those levels. So if 430 is broken, I think pressure could be there, which can take it to 410, 415. So let it go towards those zones that we can, then only we can think about buying the counter. But as of now, the structure is weak, and till the immediate level is not surpassed or the price structure doesn't change, it would be tough to comment on the counter which is trading at the lifetime low level.
Okay, that's the view on Medi Assist. But let's shift focus to a query on Scient. Debu K wants to know whether it's a good stock or candidate for investment purpose. Of course, the stock has seen quite a lot of grubbing. 33% shaved off on a YTD basis. The stock is just coming off its 52-week lows as well. Good time to look at this stock as a positional play.
500 to 1200 corrected almost 50% from its top. Someone asked about the long-term view of the company, then obviously positive, but short-term structure is negative. I believe let it correct towards 1100 zone, that is 4 to 5% lower from current levels. I think near to 1100 it might see some sort of stability.
Okay, that's about Scient, but let's also take up a query on Zomato. This query has come in from Mr. Bose, and he wants to know your thoughts. The stock had come under a fair bit of pressure, right? Today it is trading flat, so to say, but it has corrected quite a bit. It's come down to 200 rupees. Zomato or Swiggy, what's your pick now?
Yeah, I think it's festive time, and I think we can pick both to order some sweets on this festival, or we can order some pichkari as well. But yes, looking at the counter, both the counters are finding some selling pressure. But here I'll pick Zomato with the view that major trend is positive. I believe that 200 or 195, this zone could provide the multiple support juncture. So those who are looking for slightly medium to long term, they can look for buying Zomato here with the view to gain 20-30% from current zone. So Zomato could be a preferred pick, and I believe a positive price pattern is now in the process. So near 295 to 200 zone, one can accumulate for slightly medium to long term investment in the counter.
All right, that's the view on on all these new age tech stocks like Zomato and Swiggy. Of course, you can bet on these stocks given the fact that it is festive season, and you can order sweets and pichkaris from these platforms. But talk about Varun Beverages as well. There's a query coming in from Anil. Wants to know your thoughts on this particular stock. Of course, it is expected to be a sultry and hot summer, and which is why a lot of these summer centric themes have found favor when it comes to brokerages, etc. Varun Beverages has seen some bit of a slowdown in selling, right? On a YTD basis, the stock is down almost 25%, but in the last 1 month or so, the pace of selling has slowed down a bit. In fact, the stock has pretty much been a little sideways if you look at the last 5 sessions. But is it a good time to get into this counter, preempting the demand, for beverages and all these summer-centric themes? Among those, do you think Varun Beverages warrants a look?
Yeah, I'm closely watching two charts. One is the United Spirit and second is the VBL. I believe both the counters are forming same sort of price pattern. Like after the decline of last 2 months, stability is visible from last almost 16 days. So one can accumulate here. Talking about VBL, the stock has multiple hurdle at 500. If it manages to hold 500, I believe smart recovery could be there. And again, I think the intimation of the heat map is also the reason that why support based buying could be there. So with support of 470, first look for 500 and above 500, it can head to 555 marks.
Okay, that's about Warren Beverages, and this wraps up our query segment for today. Before I let you go, Chandan, any holy picks for our viewers?
So the advice on Holi is that stay safe, look at the portfolio, don't go for mid cap, small cap, be with selective heavyweights counter which are quoting at discount price. If you ask me few picks on this Holi, I'll totally focus on consumption theme of India. Indigo could be our preferred name on weekly chart. The stock is set to give a breakout from its triangle formations. So I think Indigo could be the one name to fly high. With support of 4550, we can look for a target towards 5000 marks. Apart from that, selective private banks, hotels could be on focus. I believe Lemon Tree could be one name where support based buying is visible. With support of 122, one can look for an upside target towards 140. So Lemon Tree and Indigo, I think travel and tourism sector or consumption or discretionary expenses could be on radar in this Indian market.
All right, Lemon Tree and Indigo among holy picks suggested by Chandan. With that, Chandan, would like to thank you for taking out time and joining in and sharing your thoughts with us. Wishing you a very happy Holi and hope to see a lot of hope you see a lot of green in your portfolio here on.
Thank you so much. And market is also hovering near blue or green or red color. I think market is playing the holy with both the colors. So let it find the strength to continue the colorful
That's true.
momentum in the green. And wishing everyone and thanks to all the participants who really wrote to Money Control for their queries. And I believe there is the strength in the India's equity market. And we always believe the downs are temporary, ups are permanent. And we have noticed in last couple of years that every meaningful decline was being bought. And I believe this time will pass soon and market will gear up for the next leg of rally. Wishing everyone happy and colorful Holi.
Thank you. Thanks a lot, Chandan, for your wishes. I wish you and the family the same. Thank you so much. Well, on that note, we are extremely flat. We flattened out really below that 22,500 mark, but thankfully there is some bit of green on the screen as we speak. But on that note, let me bring on board our next guest for today. Joining me is Mayuresh Joshi, Head Equity Research India at William O'Neill. Mayuresh, great to have you on the show. Some bit of green on the screen on this Holy Eve. Are you hoping that the green will extend from here? What are the what is the setup really looking like? Because globally there are a lot of challenges and we are navigating, but domestically inflation cooled off. IIP came in much above expectations. So domestically things are looking better. How are you envisaging the markets will behave here on?
Morning, Nandita. Always a pleasure to be on your show. First of all, happy Holi greetings to you, the entire team at Money Control, and all the viewers as well. And going straight to the markets, right? Choppy times the last few weeks. The market has been to a downturn last few months as well. But I think it is now trying to gestate a large part of the macro as well as the micro headwinds. So from a macro perspective, Trump tariffs, Trump tantrums might probably continue for the next few weeks till the April 2nd deadline probably comes through. But with a lot of reciprocal tariffs being levied by a lot of countries, the EU bloc itself, I think it will all come down in terms of negotiations on the table as well. Because ultimately, I think if global economies are going to get hit with reciprocal tariffs, even the US economy might get hit quite significantly in terms of both consumption as well as demand dynamics. And therefore, I think renegotiations on tariffs will take place, in my opinion. The second aspect in terms of earnings, and specifically for India, I think as we close down Q4 or this financial year, we should largely be hitting rock bottom as far as earnings are concerned. Obviously, expectations in terms of a better monsoons with La Nina conditions evolving will mean rural economy and the semi-urban economy will come back very, very strongly. We've already seen good signs of that in the past few weeks with a good Rabi harvest, expectations of a good Rabi output as well. Urban expected to come back as well with the tax cuts that have been announced. And as the get implemented in the first quarter of the next financial year, I think it should be the start of consumption coming back, which would also make us believe that at some point of time, investments in private capex as we head into the second half should start coming back and well. And therefore, earnings should bottom out. The earnings degrowth, in my opinion, should bottom out as we head into Q4 and end Q4, and should start showing some signs of revival in Q1 in the first half, which becomes the base case scenario for the markets itself. Inflationary factors cooling off in the Indian context, expectations of production, specifically to IIP through the PMI number as well, government supporting capex, RBI providing liquidity at this point of time, will probably mean that manufacturing will also get a large part of focus. And therefore, I think the three legs to GDP growth should support the Indian growth story. When it comes to the US, obviously, I think the expectations in terms of earnings holding up for a few sectors will continue. Inflation probably remains a sticky point, specifically core inflation as far as North America and Europe is concerned. But again, I think how policy making happens, what do tariffs actually mean, will probably lay down the path. But again, I think what you've probably seen in terms of the yield movement, what you've probably seen in terms of the currency depreciation, the earnings hit, I think a large part of that has been gestated by the market. You might see some price damage that might happen from a market perspective, but I think over the next few weeks or the next couple of months, the markets will hit the bottom, in my opinion, as far as India is concerned. And outside the US, India probably stands out to be one of the best economies, even now as we speak across the globe, at least over the next 2 to 3 years.
Sure, of course, India, is shining when you look at the EM basket. But since you alluded to earnings, what happens to IT now? Because there were expectations that, and even the commentary from the management indicated that the worst on the revenue front may be over. But now, with concerns over a recession in the US, and of course, a couple of brokerage reports came out yesterday when they said that the recovery in discretionary spending may get delayed. What happens to IT then? Of course, we have seen a fair bit of correction in IT stocks, and the IT index also entered the bear market territory. Would you still stick your neck out and say that one can look at snapping up some of these beaten down stocks, or would you say that wait it out for a couple of more quarters for things to get streamlined or some clarity to emerge when it comes to the tariff scenario?
All these points taken into consideration, and they're absolutely right. And therefore, I think if you probably look at how the construct was a quarter back, I think there was optimism in terms of growth, order wins, client pricing remaining stable, EBIT margins probably remaining stable as well. And therefore, even if the valuations were sky high, specifically for the mid-cap universe, which had largely outperformed the large cap, and even large caps to a large extent, compared to their own standard deviations, which were very, very expensive. I think the kind of correction that has happened, the RS ratings have come up quite significantly. And all these concerns are now getting exhibited in terms of the price damage that has happened onto these stocks. Obviously, what happens in terms of discretionary spending patterns as far as the corporating of US is concerned, even Europe to a large extent, is going to determine the fortunes of these companies. A large part of the dwelling of the applications itself when it comes to AI or Gen AI and the Chinese ecosystem that has probably developed far more intuitive models, if I would say. I think there is stiff competition that is coming through. Therefore, how do our companies evolve is going to be extremely critical. And therefore, our take is that with the price damage that we'll probably see, wait out for Q4 numbers. It's just a matter of 3 or 4 weeks when IT companies will start reporting their numbers. What do the managements feel in terms of the macro ecosystem, discretionary spending patterns, order wins, pricing of these orders? What do tariffs actually mean, if any, for the sector as a whole? And therefore, I think all these questions that will be probably answered through management commentary will hold the key for IT sector's fortunes. So at this juncture, I think it's a wait and watch for us. We'll clearly wait for Q4 numbers, wait out for commentaries, and then take a call, probably either on large caps or mid caps within the sectors.
Okay, that's the view on IT. Beat it out. A couple of more, in fact, 3-4 more weeks to go for the earnings to come out, and then management commentary will offer some bit of clarity as to how really things are panning out. But I want to get your thoughts on this entire IndusInd Bank saga. Stock has corrected quite a bit. There have been assurances from the promoter as well. Even the CEO has come out and said that no more skeletons will be tumbling out of closet. But are you convinced?
Not about my conviction, Nandita. I think the street probably believes that where legacy issues probably lie. And in the banking industry, I think trust becomes the sole factor. I think there have been legacy issues with the bank over the past few years on different issues put together. And therefore, I think the latest saga that has probably happened will mean that the bank will take a significant hit as far as Q4 profits are concerned. But apart from profits, I think it's all about corporate governance. It's all about systems, processes, and they'll have to strengthen all these aspects put together to get the trust back of both the depositors in the bank, clients transacting with the bank, and investors who are invested in the bank itself. And therefore, I think what happens next in terms of audits, what happens next in terms of either an RBI audit, an internal auditor, an external auditor, what kind of stability do these audit reports indicate? And how does the bank tackle the trust issues over the next few months, the next couple of quarters, to say the least, is going to be extremely critical. Obviously, the price damage is largely now penciling in. The hit that the bank has probably taken, in fact, more than the hit that the bank has probably taken with the saga that has unfolded. The valuations have become very, very attractive. But is it too attractive to probably go there and buy, considering all these trust deficit issues that probably exist at this juncture? My own sense is that the bank will go through a period of consolidation, and investors will look out for better banks with better corporate governance, at least in the large leadership stocks, rather than sticking with it.
Okay, of course, legacy issues, although valuations are attractive. Of course, the reputation of the bank has taken a hit, so to say. But, Mayuresh, I have so many stocks I want to talk to you about, but because of paucity of time, I would like to touch upon your Champions Trophy report that I was reading. You've listed out Bajaj Finance and equated the stock to Virat Kohli. Why do you think the stock could be a run machine like Virat Kohli going forward?
So unfortunately, Virat failed in the final. But I think if you probably look at the historical performance of Virat, I think he's always performed when he's chasing. He's always delivered when it comes when India is in the dumps, right? And similar to Bajaj Finance, I
when
think
it matters the most.
So Bajaj Finance leadership stock, they know how to play the cycles well. They know how to adapt. They know how to adapt their system. They're doing a lot of technical innovations in their work as well. And therefore, I think leadership stocks come back very, very strongly through a slump period. And when they come back strongly, I think they deliver on earnings, which is the sole goal.
Right. Also, I was just looking at Avanti feed, true to what you have really categorized it as, Rohit. Rohit, of course, the hitman of our Indian cricket team. And of course, the stock has turned out to be a hitman, so to say. If you look at the YTD performance, it has, weathered the sell-off in the mid-cap universe. Here on, how long do you expect the stock to remain at the crease?
As long as Rohit remains in the crease, which probably seems to be some time, right? Because he's given hints that he's going to continue.
He's not retiring anytime soon.
Exactly.
Yeah, he's not retiring anytime soon. He's made it very clear.
There are a lot of factors at play, Nandita. I think if you probably look at the results itself, I think both shrimp feed, input costs have stabilized. Shrimp exports itself, the pricing probably remains in favor. The volume should be better. We are already paying higher tariffs compared to a lot of countries that export to the US, right? So where the tariff comes into picture, countries like Ecuador, Vietnam, China, Indonesia, I think we are paying far larger tax compared to these players. And even if an equalization happens, I think they will be probably in a better and a beneficial position once this happens. Ecuador is having its problems with shrimp feed and shrimp exports as well. And so is Indonesia at this juncture. And therefore, shrimp pricing should probably remain better in terms of ultimate exports. And input costs when it comes to shrimp feeds are relatively better. Again, I think balance sheet remains pretty strong for Avanti feed. So yeah, I think it might keep on continuing on earnings.
Sure, of course, Avanti feed, the Rohit Sharma of the report that you've come out with. But who's the underdog, the Varun Chakravarti with a mystery spin? Which stock have you categorized as Varun Chakravarti?
So I think if you probably look at how Varun has probably delivered, right? I think it's very unique in the sense that when you're probably talking about a hitman kind of a scenario, you're probably assuming a large part of the market to probably assume that the stock will come out and do something which is not expected out of that stock. And therefore, our take is that Aarti Pharma, you talk about pharma, again, tariffs of Trump, etc., etc. But I think this stock might actually deliver out of the unexpected and then probably surprise us with their earnings pedigree as well.
All right, that's that's all that we have time for today, Mayuresh. I'm really sorry that we couldn't continue this conversation. I have quite a few questions, but of course I'll save it for another day. But before I let you go, wish you and your family a very, very happy Holi. Hope you see a lot of green in your portfolio here on, and hope we have we are near about that bottom that everybody keeps talking about, and hope the sell-off really abates from here. Would like to thank you for taking our time and joining in this morning, Mayuresh.
Thank you, Nandita. Always a pleasure. Happy day once again to you, your family, everyone at Money Control, and all your viewers as well.
Thank you. Thanks a lot. Well, on that note, quickly take a look at the markets. We are just about in the flattish territory, 22,480 or 90. We are hovering around that level, marginally in the green, clutching on to the green zone. With the skin of its teeth, the Nifty. Well, mid-cap index, however, has slipped into the red. It's a 0.2% kind of a cut coming in on the mid-cap index, and advanced decline ratio is even Stevens at the current juncture, 1:1. That's the NSE advanced decline ratio. So yes, flattened out, but let's see how things really pan out. Which direction will the market take? We'll only get to know as the day progresses. But with that, of course, come to the end of this edition of Opening Bell. Wishing everyone watching, all the viewers, a very, very happy Holi. Hope you guys get to see a lot of green in your portfolios here on, and of course, stay tuned and be with us. We will help you navigate your stock related queries, and get you all your queries addressed by our experts on the show. We'll continue to do that, so keep your queries as well coming into us. But with that, thanks a lot for tuning in this morning. Stay tuned, and we'll see you back at 3:30 p.m. with Closing Bell. Have a great day.